Good day, we are the investment team entrusted to manage your 100,000 portfolio.
Our team was entrusted with 100,000 ringgit to be managed over a short-term investment horizon starting from 7 November. The mandate focused on achieving moderate capital appreciation while maintaining a disciplined, risk-managed approach. Given the market volatility during the period, the portfolio prioritized capital preservation and diversification rather than aggressive return seeking. All investment decisions were aligned with this objective and reviewed throughout the investment period to ensure risk exposure remain controlled.
Hi, I'm Hong Yi. For our portfolio, we adopted a diversified value income strategy. This strategy focuses on balancing risk and return. First, we selected value stocks that are undervalued but financially strong. At the same time, we include dividend-paying stocks to provide stable income. By combining value stock and dividend stock, we form a diversified portfolio across different sectors. This helps reduce overall risk. As a result, this strategy aims to achieve stable return with managed risk. So, why did we choose this strategy? First, it is suitable for the Malaysian market where many companies are well established and fundamentally strong. Second, Malaysia has a stable dividend culture which supports consistent income for investors. Lastly, due to high market uncertainty, this strategy helps reduce downside risk and protect capital. So, our goal is to achieve stable return with controlled downside risk. Next, I will explain how we manage risk in our portfolio. To control risk, we apply a structured risk management framework instead of relying on only one method. First is diversification. We invested across 5 different sectors such as banking, energy, consumer staples, technology, and consumer discretionary. This helps reduce reliance on any single sector. Second, we apply a position limit. Each stock was capped at 25% of the portfolio. This ensures that no single stock dominated in the portfolio. Third, we kept a cash reserve of 10%. This helps lower overall risk and provide flexibility during volatile market conditions. Next is stop loss guidance. A stop loss level of around 10% below the purchase price was set to control losses when price declines sharply. Lastly, the portfolio was continuously monitored. This allowed timely decisions such as adjusting position or executing cut loss action when needed. Overall, risk was managed through structure, discipline, and regular monitoring.
This slide shows our initial portfolio allocation, contracted on 7 November 2025. Out of the 100,000 ringgit capital, 82,286 ringgit was invested across 5 Bursa Malaysia listing stocks, with the remaining amount held the cash for flexibility. The portfolio was intentionally diversified across banking, chemical, consumer staples, technology, and retail. Defensive stocks such as Maybank and Nestle will assign larger weight to stabilize the portfolio, while gold-oriented stocks like Inaria and Mr. DIY provide upside potential. This allocation reflects our balance and risk-aware investment approach. This slide summarizes our trading timeline. The portfolio will contracted on 7 November, following by weekly performance review, starting from 14 November using market closing price. During most of the investment period, we adopted a hold strategy due to short-term market volatility. A key decision was made on 1 December to cast losing on Inaria following a persistent downward trend. The portfolio will then held until the end of the simulation period on 8 December. This slide highlights our key trading decisions during the simulated period. Overall, we adopted discipline and risk management approach, prioritizing capital preservation over short-term gains. For most of the investment period, we maintained a hold strategy due to market volatility without strong fundamental signal. However, Inaria continued to show a persistent downward trend and underperformed the technology sector. Once it reached our internal risk tolerance level, we executed a cut-loss decision to reduce further downside risk and stabilize the portfolio.
At the beginning, the portfolio started with a total capital of 100,000 ringgit. Out of this amount, 82,286 ringgit was invested in stock, while the remaining portion was kept as cash for risk control. In the middle period, the portfolio value declined gradually. This was mainly due to market volatility and price decline in some stocks, especially in the technology sector. By the end of the period, the portfolio value reached 76,061 ringgit. Although there was a small recovery along the way, it was not enough to reverse the overall downward trend. Overall, the chart showed a steady decline rather than sharp fluctuation, indicating moderate volatility during the investment period.
During the investment period, 82,286 ringgit was deployed into equities, with the remaining balance held as cash for liquidity and risk management. By the end of the period, the equity portfolio was valued at 76,061 ringgit, while the remaining cash balance stood at 17,714 ringgit, resulting in a total final portfolio value of 93,775 ringgit. This represents an overall unrealized loss of 6.23% relative to the initial capital. The negative performance was primarily driven by broad market weakness rather than excessive concentration or speculative exposure. Compared to the KLCI benchmark, the portfolio underperformed, reflecting the challenging market environment during the investment horizon. In terms of individual stock contribution, Maybank and Nestle were the strongest performers, supported by their defensive nature and relatively stable earning profile. In contrast, Inari recorded the weakest performance, mainly due to continued weakness in the technology and semiconductor sector. To manage downside risk, the position was fully disposed of through a cut-loss decision, which helped reduce further portfolio volatility. Sector-wise, financial services and consumer staples provided relative stability, while the technology sector negatively impacted overall performance.
My name is Lai Ting. I will explain the main lesson we learned from the trading simulation. First, market timing really matters. In our portfolio, Inari was chosen because it was undervalued and had strong fundamentals. However, the technology sector was weak during the simulation period, and the share price kept falling. This shows us that even a good company can perform poorly if market sentiment is negative. Second, diversification had reduced risk. Defensive stocks like Maybank and Nestle were more stable compared to technology and retail stocks. Their price movement was smaller, and this helped reduce the overall volatility of the portfolio when the market was weak. Another important lesson was emotional discipline. When Inari price dropped below our risk threshold, we decided to cut loss. This was not an easy decision, but following our stop loss rule helped prevent larger losses. To conclude, this experience taught us that in a weak market, risk management and capital preservation more important than chasing high returns. Next, I will talk about our team reflection. Working as a team was a very positive experience. Each member had a clear role which improved accountability and made our investment process more organized. All investment decisions were discussed together. For example, the decision to sell Inari was made after group discussion, not based on individual emotions. This helped us avoid impulsive action and also make more disciplined decisions. However, there are some improvements we will make next time. We will pay more attention to sector trends, especially for technology stock, and improve our market timing. We will also rebalance the portfolio more actively instead of holding position for too long. All in all, teamwork helped us manage the portfolio in a more structured and professional way.
Based on the portfolio performance and market condition, we recommend maintaining a diversified investment approach with a stronger emphasis on defensive sector. Future investment in growth stocks should be supported by carrying trend confirmation and stricter entry timing. Additionally, retaining a cash buffer will provide flexibility to manage volatility and capitalize on future opportunities. Overall, disciplinary management remains essential in achieving long-term investment objectives.